Hey everyone, welcome back to another video. In today's video, we're going to be discussing one really important factor as well as our technical analysis on the S&P 500, Nasdaq, Bitcoin, gold, and more. And that will be why options are such an important market for you to be looking at and bringing together with your technical analysis, your fundamental analysis, and just in general trading experience. It's Wall Street's job to make sure that you don't make money. Stay tuned to find out more. So as we like to do on this channel, let's begin by talking about a heat map of the S&P 500 for the last 24 hours. And you look at this chart and you think, oh, it looks okay. It's a bit of green, a lot of areas doing well. Semiconductors on a run, which is excellent. Banks up a little bit. And then, of course, the weakness being found in Facebook's earnings and after the close, Amazon's earnings. For Tesla fans, 4.69% is a much better day. And that's excellent news for a lot of people out there. Now, what I really want to talk about is what is going on right now in the market and how most news articles, most mainstream media, everything else, they're just not talking about this issue. And that is that, of course, we've got the debt ceiling drama and debt ceiling coming back up. Now, many years ago, this was a huge thing. It actually really destroyed the market for a little bit there for people that have been in the market for some time. And does it cause corrections, or does it cause kind of big issues when they don't agree? You could say it's a non-issue. Some people will say, oh, well, it's fine. You know, debt's already here and they'll sort it out. And I'm sure they will, but it's just one of those little bits of information that no one's talking about. And then suddenly they'll flick the switch, they'll talk about it. And it could be a potential questionable catalyst that you see in the mainstream media next week being a discussion. Am I worried about it? No. Will the Wall Street guys be worried about it? Let's see if they use it in their storylines. We'll have to find out more. Let's just quickly look at our fear and greed index here for Twitter, and you'll notice when we refresh it, it's coming through for a 50 to 60. It's funny how fast it moves. Yesterday, we had it up near that 70-80 period, and then now it's come back after the Amazon earnings, after the other stuff. So remember, fear and greed of retail is really what you're looking for in the markets. It shows us a lot about what's really going to be going on over that next week, over those next couple of weeks, from a psychological perspective. Now, yesterday's market may look like it did nothing, but what actually happened in the morning is that we had a big movement up here in, of course, Nasdaq stocks, and this was for the close of the 29th of July in the US. And basically, we had a big movement up in hyper stocks, and then the hyper stocks started to decline near the end of the day. Now, I'll show you in options terms what I believe Wall Street was doing. And it's just something, it's not always 100% accurate, but it's something that you can use to try to get a bit of an idea on their real psychology here. And I think you guys will like it a lot. So when we bring it up, you'll enjoy it. In terms of the sectors, semiconductors, as I said, were the best. And then we had water as well, performing quite well. That's the PHO. Not bad. In terms of water investments over the last couple of months, we've been talking about that specifically for last month being a big breakout there, and it's doing quite nicely. We mentioned before Amazon's earnings as well. Amazon came in a little bit lackluster. Pinterest also got smashed. That's creating a bit of a sell-off here in the futures market. It's also creating a very good storyline that lets Wall Street set up for potentially a little bit of a weakness in this August-September period. This is the Nasdaq over 20 years. I keep bringing this chart up because I believe it's important. Usually over this period, kind of the August-September, we see sideways Nasdaq. We see slightly declining Nasdaq with kind of more sideways action, or we actually have a full-on dip with buying experience. It's not traditionally the best couple of months to hold Nasdaq-style stocks, and I just want to make sure people know that from a, let's call it statistical perspective, that's just the way that it goes in the markets. Let's get into the technical analysis now and talk about the dollar index. And I think dollar index is always one of the best places to start for us. We get a bit of an idea on risk off, risk on sentiment. Now, dollar index has been getting bashed recently. It's being sold off. It's hit a 50 exponential on the daily. And somewhere around here is where you expect some buyers to come back in. Everyone's suddenly bearish on the dollar index. 50 exponential gets hit. I would expect a little lightning bolt here on the smaller time frames and maybe a little bit of a pickup, 92.50 being the main resistance. And there are some reasons why I think that might occur. Number one, it could be gold. Gold, great trading, everyone. I want to give you a bit of a clap because this is an excellent trade for the community. What a great series of lower highs And we detailed this very well on the channel the last 2 days. And we talked about the fact that the 1811 area, once that closed above, would send some shockwaves through gold and begin that participation phase. Now, the participation phase has begun to 1830. And if you're looking at gold right now and you're saying, I wonder if it can go any higher. Well, it's hit first target. There's no doubt that around this 1830 zone is first target. But notice the way that the price action is currently, really consolidating. It's coiling below the peak. Now, if it coils here for a little bit and then breaks out and gets a close to a new high, is that stronger than if it just went blasting through? In many ways, from a technical perspective, yes. Because when it coils at the peak like this, it's getting a whole bunch of short sellers. People will try to sell gold here. People will also sell based on indicators. So you'll have things like stochastic indicators, RSI indicators, MACD, all sorts of divergence and things playing out. And people will sell here because of that. What a coiling market allows the market structure to do, or just in general what it's going to do, is effectively it is resetting those indicators and allowing everything to kind of cool off before the next big move. So remember, coiling at the peak, there's nothing wrong with that. What you're waiting for is a breakout to the upside. If, of course, it broke out to the downside, well, that'd be bad. Back to 1810 for it. But overall, if it breaks out, gold could be on a decent run here. So definitely worth watching the gold and silver markets at this stage. Now, let's move over to AMD, because I want to bring in this idea of Wall Street have a plan, and that plan may not be what you think it is. So AMD is the talk of Twitter. It's the talk of Wall Street bets. It's probably the talk of stock twits. It's all over the internet right now, AMD, AMD, AMD. And when I see retail get so interested in a stock that isn't AMC and GME and those types of ones, I always question whether Wall Street's behind the curtain, let's say, looking for some manipulation. And here we see AMD have a very, very good move yesterday. It moved up hard. You can see it hit the top of this trend line here and found some resistance. Now, uncanny that it found exactly resistance around the top of the trend line. Also, when you think about it, what's the perfect play for Wall Street to do? If I was trying to extract, let's call it maximum value, I would take the bullishness, I would allow the bullishness to get past 100, which we all know is a key psychological level. I would allow it to continue to run, and I would mostly want as many people as possible to open weekly options on the position, okay? So yesterday we talked about this, and we talked about this in the live stream, and we've talked about options a little bit here. And it's not always the way it's going to be, but it's definitely something that you want to pay attention to. Now, if you go back and have a look at this number of how many options were open at 100, at 105, at 101, at 102, all these levels here, what you'll find is that there was a lot less. All of a sudden, with this massive hype on AMD, the options positions have blown out. And I mean blown out in a massive way. There is great money to be made here by Wall Street if they can push AMD underneath 100, and ideally they would get it underneath 98 by the close on Friday. I did a quick private hangout last night. If you're in that private room and you heard that, give me a shout out down below in the comments section. And we were talking about the fact that what we were seeing was a lot of hyper stocks, a lot of tech stocks hitting key resistances where we had huge options positions. It's in Wall Street's best interest always to expire these worthless and collect the coins. So yeah, lots and lots of options. It doesn't always work, guys, of course. Nothing always works, otherwise it'd be easy, yeah? But yeah, that looks a little sneaky. That's sneaky Wall Street as far as I'm concerned. And it's interesting to know and understand the options market. Even if you don't trade it, you want to understand where all those positions are expiring. Let's move over to Tesla now. Speaking of options, I'm sure there's some interesting things, metrics to go through in this one. We won't have time today in today's video, but definitely subscribe if this type of stuff interests you. And we've got here a 690 resistance, and of course we've got the 621. Ultimately, the technical analysis will trump all. And we know that 690 is the key zone. If we close above that, boy, oh boy, could we go into some participation phase up to the kind of 780 area we've theorized on Tesla if it does do that. So I'm excited. This is looking good. We had a long leg doji, well, a little small one. We had a decision made. We've got every moving average under the sun underneath this price right now, which hopefully should act as dynamic support. The 20 exponential, the 50 exponential, and the 200 SMA. So things are coming alive here for Tesla, and hopefully you guys do all right in this if it does continue to run. At this stage, inside the channel trap. So we'll find out more very, very soon. Let's move over to the QQQ, because this is the, I guess you would say, the index that we are most worried about during the period of August and September. And we're only worried about it just because of the high valuation. Obviously, we've got Amazon coming out, Pinterest, and that buy the rumor, sell the fact on a lot of these massive earnings. So from the perspective of, is the QQQ hot? Yeah, it's been doing very, very well. I always look at it from how far away it is from the weekly 20 moving average, because that tends to be the mean reversion. And we've discussed quite a few times on the channel recently that it's probably overdue to get a 50 exponential moving average in it at some point. The amount of puts that are sitting here at 320 on the QQQ is phenomenal. So there should be a bit of a wall there if it does end up having a bigger correction. And we've been talking about keeping the powder dry, having a plan, all of those types of things. And I think the QQQ is just, it doesn't know where it wants to go. If it breaks the trend line, of course, happy days. If it doesn't, this is not the market that I'm like, wow, I love buying the dip here. I don't really, but you've got to make your own decisions. It's still long leg doji, no decision made. So we'll find out whether the Friday session ends up being bad, or whether next week, it's still sitting around here and then we get hopefully a decision made. You'll notice the futures are down. So at the time of this recording, we do have some futures moving on the way down here. And again, we kind of maintain 14.5 is going to be where the bears can get back control of this market. Anything above that, still bullish from a technical perspective for sure. There's just no bearishness that we've seen so far, other than volume has dropped, breadth, etc. Those types of things. IWM is still one we're maintaining to look at throughout, real corrections if they do occur. Usually real corrections, they start with the bottom kind of smaller companies. You'll see weakness come into those as Wall Street moves to hedge into larger companies instead, and utilities and other consumer staples, etc. And a weakness underneath 208, I think, would be very bearish for the market, but that hasn't happened. So again, we're just looking at it from be cautious at this stage. S&P 500 has no idea as well what it really wants to do. You've kind of got the long leg doji and then barely any higher here. It's okay, but again, Friday options expiry. I'm not sure if I'm won over by Wall Street not wanting to take the coins on AMD and a few other stocks. So that could, of course, be lackluster, especially with that Amazon result. Community trend line still remains that top end kind of range. If it was to move up here and go really bullish, there's only about a 3% upside before it hits that. And this has been incredibly good at predicting, I guess, a take profit zone. So that would be kind of probably hitting around 4,600 if it was to continue to bull. So there's maybe a 200 point upside here before everything goes bad, but we haven't seen anything yet. So we'll find out more over the next couple of days. A market that is looking good, however, is actually the crypto market. Bitcoin's doing its consolidation. Other coins are starting to catch up with obviously some hype as we're seeing alts take lead. And Ethereum is always the first alt that really should be getting the attention. And this is certainly a great base that it's formed here at the 1700 level. We've got a great resistance through this zone as well. And we're getting a daily close potential here for above the 2400. Now, we've theorized quite a few times the levels. I haven't changed these. It goes 24 into the 26. You can see it over here. And then, of course, you've got the 28 as well being a very, very key zone. So I actually quite like Ethereum from the chart perspective. When you look at it from technical analysis, you're thinking about what it's doing. You go down to the smaller time frames. Is this a chart that looks weak? It's got a 4-hour 20 where it's continuously made higher lows. It's continuously strengthening up, and then it starts to explode out. And hopefully we get some volume here as it gets past the 2400 and closes above. Things are looking better here on Ethereum, and this is definitely one of the cryptos that I'm looking at. Bitcoin, I've told you guys before, I would like it to continue to consolidate here for a little bit, just underneath that kind of 48 level. The longer it consolidates there, or at least a little while, it springs and cogs, the more likely this is a Wyckoff style event, where we've got Wyckoff accumulation and it can continue to move up afterwards. I like it. I just want to see a little bit more. And yeah, that's very natural. Weekly close above the 20 will also be a great level. That would put a body above any other body during this whole crisis. 42.5 remains one of the key resistances. So I'd like coil here, breakout, smash 42.5, and then we should see a lot of excitement come back into the crypto world. Thanks so much, guys, for watching the video. If you do enjoy these videos, remember to subscribe, hit that like button. We'll see you 1 hour before the New York Open. Of course, that is 8:30 a.m. in New York time, and it's always great to do those live streams. The community is awesome, and thanks so much. Bye for now.